I'm Matt Bishar with REIT.com, and I'm in New York City for REITWeek 2012, NAREIT's Investor Forum. Joining me is Jay Flaherty, Chairman and CEO of HCP. So Jay, where are you seeing the best investment opportunities in the healthcare sector right now?
Yeah, actually right now, they're pretty broad-based. We invest in 5 separate property types: medical office, life science, senior housing, the post-acute, skilled nursing space, and acute care hospitals. And we do that through various parts of the capital structure: wholly owned real estate, mezzanine debt, development, joint ventures. And right now, we've got the interesting thing right now, given what's going on, both domestically in the United States and then obviously abroad, particularly in Europe, you've got dialogue across that entire spectrum. So it's very encouraging right now.
And heading into the second half of 2012, what's going to drive HCP's growth?
We have 3 growth drivers, one of which we've got a very high degree of visibility on. That's our same property performance. Our portfolio today is, I'd say 95% of it is stabilized. And what that'll produce is a 3.5% to 4% same property performance growth rate organically. Our balance sheet is pretty conservative. It's levered 40 parts debt, 60 parts equity. So when you take a 3.5% to 4% organic portfolio growth at that leverage ratio, you get plus or minus 6% of FAD growth per share with nothing else. So that's 95% of the portfolio. The remaining 5% is not stabilized. That'll take a couple of years. We have some land holdings that are in the entitlement process, for example, and some other things. So that'll stabilize over the next couple of years, which at the margin will incrementally add to that 6% FAD per share growth. And then of course you've got external growth, which is nothing that we forecast, but in light of my earlier comments to you, Matt, about the amount of dialogue that we've got going on, I think it's reasonable to expect we'll get some incremental growth from the external side as well.
And lastly, we continue to see uncertainty in the markets, but one thing that has endured has been REITs. And what do you think, in your opinion, makes REITs such an efficient and effective way to own real estate?
Well, I think the core things are the governance, the reasonable leverage, the best practices, and not to kind of come off as pontificating or anything like that, but obviously corporate America had some issues going into the crash, had some bad things happen with WorldCom and Enron and things like that. Coming out of the crash, I would have expected that people might have learned from that. And again, I'm not objective on this point, but if you take a look at just even today, what's going on in other industries, and just stay within the United States from a corporate standpoint, you got some of the same old shenanigans that are happening again.
Jay, thank you so much for joining us.
Thanks, Matt.
For more on this and other REIT news and analysis, be sure to visit REIT.com.